Professional liability insurance is used to cover claims of negligence attributed to professional actions in certain occupations or skilled trades. Common examples can be found in the medical field. Doctors, surgeons, and others in this industry are at the forefront of liability concerns. There are a number of policy forms available to provide liability protection to your clients. There are also numerous exclusions and conditions attached to these policies, so it's important that you understand them. It's critical for making sure your clients are properly covered. But a solid knowledge of liability insurance can help you steer clear of errors or omissions in the performance of your duties as well. We then took a detailed look at surety contracts. Remember what each of the three parties to the surety agreement do in these contracts: the principal, the surety, and the obligee. Next, we're going to take an initial look at the basics of flood insurance. This will be just an overview, as each state requires producers to complete a flood insurance training course before selling the coverage. Mostly, you need to remember that clients don't usually know that their personal or commercial lines policies typically exclude losses due to flood and related exposures. It's your job to explore all of the potential loss issues with the client and to recommend coverage that addresses those concerns. Clients need to know that homeowners' policies don't cover flood damage. Most provide for water damage due to the sudden bursting of a pipe and other water-carrying devices in the home. And while that may cause damage to a home, this is not considered a flood. The federal government provides the framework for flood insurance through the Federal Emergency Management Agency, FEMA. Private insurers are the sellers of the coverage in concert with the government through what are called write-your-own allowances from FEMA. Another type of coverage we'll examine is boat and watercraft insurance, which typically require a separate policy to be purchased to cover the boat, motors, trailers, and boat equipment, as well as liability coverage in the event of an at-fault loss. Homeowner policies don't do a very good job covering watercraft and provide only minimal coverage. There is also a classification difference when comparing boats to personal watercraft like jet skis. There are a number of coverages on boat and watercraft policies that mimic contracts like auto policies. Boat policies offer liability, uninsured and underinsured boaters coverage, physical damage coverage, and protection for boat equipment. Boat equipment covers things like anchors, sails, and tow lines. The contract may also be endorsed to provide coverage for personal items through a personal effects coverage. One interesting specialized coverage we'll discuss is that of difference in conditions contracts. This can sometimes play a key role in providing proper coverage for a client. These policies can plug the holes in an underlying contract, but they can also provide coverage in situations that aren't covered by the base underlying policies. Finally, we discussed coverage for recreational vehicles, which aren't insurable under a normal automobile insurance policy. Auto policies have restrictions on how large a vehicle may be, as well as other conditions to ensure that anything insured meets the definition of an auto. RVs must have a separate policy. Let's get going.